Hey guys, if you are an independent contractor who gets paid through a 1099 or you are self-employed, then you're eligible for a forgivable loan through the Paycheck Protection Program. What this means is that the government will give you a loan and up to 100% of that loan will be forgivable if you spend it on qualified expenses during an 8-week period. We'll go into more details later on, but that's the general gist of it. This is the best loan for you to apply for if you are an independent contractor or self-employed. So make sure to watch this video all the way to the end. So the Paycheck Protection Program, PPP, was signed into effect on March 27th, 2020. About $350 billion was designated for PPP loans, which seems like a lot, but it's actually drying up quite fast. In this video, I'll focus specifically on independent contractors and self-employed people. Yes, you can also get a PPP loan if you own a company with under 500 employees, but you definitely don't need to. You can definitely just work for yourself or be an independent contractor and still get this loan. So first I'll go into the loan details and who's eligible for it. And then we'll go through the steps you actually need to take to apply for a PPP loan, as well as the things you need to consider before applying. It's very important to understand some of these drawbacks because not knowing these drawbacks might bite you in the butt later on. Okay, so let's get started with the details of the loan. The max loan size that you can receive is 2.5 times your average 1099 income or your net self-employment income. This is calculated on the last 12 months. It is a very low interest rate, so capped at 1%. And the loan term is 2 years with 6 to 12 months of no payments. Now, what is forgivable about this loan? Well, for the first 8 weeks that you have the loan, whatever qualified expenses you use the money on, that is 100% forgivable. This includes paying yourself an income, paying a mortgage, paying business rents and utilities, and so on. 75% needs to be spent on payroll for either yourself or your employees. So for independent contractors and self-employed people, that's just you. And 25% can be spent on the rest, on things such as rent and utilities. If you do spend more than 25% of this loan amount on rent and utilities and other stuff that isn't your payroll costs, then it won't be 100% forgivable. But a portion of it still should be forgivable. And like I said, this applies to the first 8 weeks that you have this loan. The federal government requires that this loan is very easy to get, so no collateral or personal guarantees from you, as well as no loan origination fees. So who is eligible? Well, anyone that receives 1099 income or self-employment income is going to be eligible. And by eligible, I just mean you are able to apply for this loan. It doesn't mean that the bank will necessarily approve you. However, most people I hear of who are applying for these loans are getting approved. But no, it is capped at a $100,000 salary per employee. So if you personally make over $100,000 per year, you won't receive as much as you expected. So now where do you apply? Well, I've talked to quite a few bankers about this, and this seems to be the general consensus. If you have a previous relationship with a bank, that means you have a depository account with them, or you have a previous loan with them, then it's generally recommended that you apply directly with them. This is because banks are getting overwhelmed with applications right now from struggling businesses and independent contractors and self-employed people. So what they're doing is they're actually prioritizing either their own customers or only accepting their own customers. I mean, they'll take your application, but the chances of it going through if you're not actually a client of theirs is lower. What you have to know is these banks are taking on some risk when they give you a PPP loan. Yes, the loans are technically backed by the federal government, but that's only if all the payroll costs and other costs are calculated correctly. If they aren't calculated correctly, then the banks will run into some problems later on, especially when you are applying for forgiveness. Ultimately, the loan is still on the borrower, so but they still need to service it. So what I recommend doing is just calling a bank that you have a previous relationship with and asking to speak with a banking representative who can help you with a PPP loan. Tell them your situation and that person will guide you through the whole process because each bank has a different process for applying. Some banks will allow you to apply directly online by yourself. And that's actually what I'm doing with Chase right now. Chase basically sent an email out to all their business banking clients, giving them a link to apply for the PPP loan. So check your emails, maybe your bank has done something similar. So the most important document you need to have when you're applying as an independent contractor is your 1099 miscellaneous miscellaneous form, because this shows you your net income and it shows you how much money you're paying taxes on. The government basically wants you to use your taxable payroll costs, aka the money that you're paying taxes on. Now, if you have your own business, you'll also want to have your own income and expense reports for 2019. Of course, you're going to need a lot more documents, but the most confusing part about applying for a PPP loan is knowing your payroll costs. Lenders and banks will generally have you fill out this information first on your own, and later on in the whole application process, that's when they will verify it. So yeah, they won't be calculating it for you. You have to do that yourself. So now, how do you calculate your payroll amount? For independent contractors, look at your 2019 1099 miscellaneous income. If you file a Schedule C, look at line 31. If you have any expenses, make sure to deduct that from your gross income to arrive at your net income. Divide this number by 12, and that is your monthly income, and then multiply that by 2.5. This is going to be the loan amount that you qualify for. Now, if you make over $100,000 per year, just take $100,000, divide that by 12, and then multiply that by 2.5. That is your maximum loan amount if it's just you. If you have more employees, then that's when you can have a bigger loan amount. But for this video, we're focusing just on independent contractors and self-employed people. So if you are a sole proprietor, look at your 2019 net profit, which is basically line 31 on your Schedule C. If you have any employee salaries, add that to this number. But for most of you guys, you won't have any employees. So just look at your net profit on line 31, divide that by 12, and then multiply that by 2.5. That's all I'm gonna get into for actually calculating your payroll costs. If you have any further questions, I definitely recommend talking to your banker. They'll be able to give you some guidance, but they won't calculate for you. Please note their phone lines are probably ringing like crazy, so expect to wait quite a while if you are calling. So now that you've calculated how much money you can actually borrow, this is when you have to go to your bank and actually fill out that initial application. It's different for every bank, so after you get to this step, make sure to communicate with your bank on how to exactly apply. But for most banks, it's just gonna be an easy initial application that asks you for your payroll costs and other personal information, and then from there on, they will walk you through the whole application process. Now, before you go and apply for a PPP loan, there are some things that you need to be aware of. These factors are definitely some drawbacks of getting a PPP loan, so you wanna go through this list and see if it still makes sense for you. So yes, this loan is 100% forgivable, but that's only if you calculate your payroll costs correctly and spend the money on eligible things. If you don't, part or up to all of the loan amount won't be forgiven and you will have to pay it back. Some people say like, hey, it's just a 1% interest loan. How bad could it be? The problem actually is the amortization schedule of this loan once it is due. These loans have 2-year terms and 6 to 12 months of no payments. So let's say that your bank allows you to not make any payments on this loan for 12 months. That means after 12 months of no payments, you're gonna have exactly 1 year to pay off this loan. If you get a $50,000 loan expecting it all to be forgiven, but then you do something wrong or you spend it on the wrong stuff, the government could be like, hey, we're only forgiving $30,000 of your $50,000 loan, so you still have a $20,000 loan that you need to pay back. For a $20,000 loan paid back over 12 months at 1% interest, this means that your monthly payment is going to be $1,675. These are some big payments, and I'm not sure if every business will be able to pay them back. So that's a very important thing that you should definitely consider. Besides the risk of your loan not being completely forgiven, you'll also need to consider how well you know your qualifying expenses. If you spend too much money on rent and utilities during those 8 weeks, then not 100% of your loan will be forgiven. This means you have to be extremely careful actually documenting your expenses, and you need to be up to date with where the money is going at all times. I would recommend opening up another bank account just for this loan, depositing this money in this bank account, and that's gonna make it a lot easier for you to track where everything goes. But yeah, always keep that 75%, 25% ratio in the back of your mind. The thing is that no one knows how forgiving the government is going to be because no one has gotten their loan forgiven yet. No one has reached the end of that 8-week period. And also, guys, banks and lenders have up to 8 weeks to process the forgiveness. So it won't be a while until we start seeing people with actual personal experiences on getting their loan forgiven. I recommend applying as early as you can because while you can apply as late as June 30th, 2020, they will surely run out of money by then. And we don't know if there's going to be another stimulus package that gives more money for these PPP loans. So yeah, get in line ASAP. I hope you guys found this video helpful. If you are an independent contractor or you are self-employed, this is a great alternative to applying for unemployment. If you make a lot of income, then this is probably the better way to go. The reason why 75% of your loan amount has to be spent on payroll costs is because the whole point of this PPP loan is to keep more people employed and off of unemployment. Since you are your own business, getting this loan will keep you employed. And that's why the government is being quite generous with this loan. If you have a friend who is an independent contractor or who is self-employed, make sure to share this video with them. Give my video a like if you want, and also subscribe to my channel if you want to see more videos just like this. Thank you so much, and I'll see you guys in the next video. Peace.